Hello, everyone. I'm Rob Smith of the In the Black Quant Edge VTF here at T3 Live with today's market wrap up. And she's been a little quiet, hasn't she, as we prepare for Trump to take elected office. So what we had was an inside day tight range in the S&P. And so often when things really dry up like this, more often than not, you're going to see us take out both sides, and that we did. So we go to take out the upside, take out the downside, don't really go anywhere. And so on a shortened week, we also were still inside on the week. We're inside week, so we're 2 weeks completely within there. So as far as the S&P is concerned, really doing nothing. So when I say that we're expecting oftentimes to see that take both sides, you hear me talk about a broadening formation. So when we took it out in the morning, what we do is we go to a 30-minute chart. We go up here. If it can't hold that level of the old inside day and starts breaking in here, we look for signals that could say we're going to take out the other side. This is called a momentum shooting star, and that's what did it. If you take this out, it's going to give you a broadening formation, a little tough to make money on, but it will get bigger. So you can say identify that pretty clearly. So we're down to slight divergences in the broader averages because you got SPY doing this kind of nothing. You got Qs still near the high, going to the highs and coming back kind of nothing. You got the small cappers drifting lower here, and you've got the Dow Jones Diamonds touching just some slight lower lows there to see if that can come back up and finally make the 20,000. We have to be a thunder rally tomorrow for Obama to do it, but we'll see. So it's very slight. And so what we're seeing here, when it gets this quiet, and what we haven't seen in a while, and why it's getting ridiculous, is that we're not even seeing any shift of significance in any of any sector rotation, and that's given us this lackadaisical waiting for the shift to power 4-day kind of thing. So I tweet out every morning the gap list. It's a hashtag mind the gap at Rob in the Black, so we can find out where things are moving. And so that really was where we were focused today. If you go to CSX, gap up. All right, not everybody knows how to do this, and I'm having an upcoming lab here to train people on how to do this. But if you just look at this first, you go to the 60, inside 60-minute. This is called a momentum hammer inside this bar here. Takes that out, goes to the upside, another inside. So these are rests. Right, rest before going up. Up, inside, rest, up, inside, rest. And then if you look at this 30-minute here, you're going to see this thing. Well, here's inside and up on the 30, right? If you go like this here, you'll see this inside bar countered with hammer. That's called a rev strat, right? Here, and what that means is it tried to take out the side of the inside bar, and that's how it sets up to go take out the other side. It was very nice there. Netflix on the gap up, if you go to the 15, a little tricky too here, but Netflix, you did have right out the chute. You did have shooting star 15er that worked very nicely, but it was only for a short amount of time, and then it kind of chopped down. It did go inside on the 60 here and then break, but once again, it's a little choppy in here on the way down, but it did go inside 60, and that, there's some shorting opportunity there, at least briefly. Tesla, oh yeah, Tesla gaps up big. And if you've watched my macro video at the end of the year, I talked about that very same pattern, the rev strat, the inside bar countered with hammer on a quarterly basis, all right, and that being very powerful above 223.80, and so no surprise there for Tesla. But then when it gaps up significantly like that, we can still also look to reverse on it. Once again, that same pattern here. Inside 15, countered with shooting star. Stops are here, here, and here. 1, 2, 3, skidoo, wiper, and there's a few nicers in there. You got a rev strat off the lows here too. Inside bar countered with hammer, boom. So some of your two biggest moves are off of that. That was pretty nice. If you go to Mobileye was on the gapper list too. Did the same thing. Here you can see this right out the chute. Here's that opening 15 range. You go 30, inside 30, and what's going to trigger the inside 30? The combination with that rev strat setup, inside bar, shooting star. Where are the stops? 1, 2, 3, 4, 5. Took them all out. If you go to RCII, that was on the gap list too. And that tried to come roaring back, but then it stalled and went inside in the 15. That went inside in the 30. Then it took the 30 down, the 15 down. By the time, because of this was a wide range, it also formed an inside 60-minute bar and took that out and never came back. And that was a nice move, too, on a percentage basis. You go to ZYNE, It's called a kicking pattern when you have a long bar like that with almost no shadow, gaps completely below it. Oftentimes things when they do that are in a lot of trouble, as you can tell. And then we can look at the opening and you'll see something like this. Goes here, it goes inside in the 30, goes inside in the 30, breaks the 30 to the downside, never comes back. Sunshine Heart, SSH, if you can get a gap, if you can get a borrow on this, there was some shorter term stuff up in here. But if you look at the 15, you're going to see this. That's what a measured moves looks like. An immediate drop into the gap, an inside 15. And then you take the measurement of this. When it breaks the 15, boom, measured move complete. That was nice. You got KSU. That was a little trickier, but you did have the big shooting star 15er if you took that in the morning, and then an inside 15 to the down. Got a little trickier down in here. And Union Pacific opened up as an inside 15, went down, and never came back. So, when there's no volatility, go where it is, know what to do, and that's what all you can do is try and find it. It's not when we don't have all the easy pickings out there. We got to go exactly where we need to be. So, all right. So we've got, like I said, we've got the inauguration tomorrow, and we're still in a tight range. We're still an inside week, and so we're not going to expect much out of the S&P unless we can break at least 224.95 or 227.45 on the upside. Otherwise, we go inside week, and potentially, if we really dry up tomorrow, we would set up the inside day, the outside day back inside, and that would set up for a nice setup for a nicer setup for Monday, because that would give us the expansion of the range that we saw today, then another contraction, and an inside week. So we could take out the expansion on the daily, and then potentially take out the contraction on the weekly, and maybe get a real attempt at a move, I should say, by Monday. But we'll see how it goes, and we'll see what we got. Some earnings. IBM was up. We got SWKS out. So certainly stuff like that will be, if you're not trading it right now, certainly come the morning time when we have earnings. That's usually where the gappers are, and that's where we're going to be looking. All right, that's going to do it for today. I'm Rob Smith, the Black Quantage VTF here at T3 Live with today's market wrap-up.